Buddies, this Monday edition on the 18th of September 2023. Thanks for joining us. It's nice to have you. Those of you who are new, we'll explain exactly what we attempt to do during the show in a minute. First things first, however, and we will go and have a look at the gold chart. The reason we're having a look at the gold chart is because that's where we start each and every session. We are attempting to nail down the process of making the breakout of Asia session via the gold versus US dollar as a breakout trade. Today, doesn't look real good. Let me explain what we're attempting to do. On the 1 hour chart, we isolate the Asia session. Asia session is the second 1 hour candle of the day. That's where it begins. So the low of that session, there's Asia session. The low of that session is this bar here. So we'll isolate that and put a line underneath it. And the high of the session to date is that high there. So we'll also isolate that. Now what we attempt to do is trade the breakout of that session by taking a long position above the high and taking a short position below the low. Now, if one of those triggers, then we cancel the other. OCO trade, that's what they're all about. One cancels other. What we do if the long cancels, if the long enters, we cancel the short, which is where our stop loss would be. So the entry for the short is the same as the stop loss for the long, and vice versa. Stop loss for the short is the entry for the long. The filters that I'm using at the moment and the targets that I'm using at the moment for this trade are simply the pivots. So if we entered here, we're trading straight into the daily pivot and straight into the weekly pivot with a risk of about $8.20. Our first target area would be $1.10, and our second target area would be $3.80. So the risk that we would have to take to pick up $1 something or $3.80 is not worth it. So I wouldn't be taking that trade. Now, down the track, if we take away those filters and maybe use something like a horizontal level, then we would be able to take that trade because the risk to reward would be far greater. But do we really want to risk, as I said before, $8 or whatever that was? I think it was $8. Yep. To win 3? And the answer is no. Going the other way, if we were taken into the long, our pivot, our first pivot, DR1, is once again a mere $1.90 away for a risk of $8.30. Once again, that makes absolutely no sense to me. So therefore, with those filters in place, exiting at the pivots, I won't be taking that trade today. But if you're new, I would advise you to monitor this and see exactly how it does work. As you can see on Friday, the range was here to, where's the 9 o'clock bar? There. So there was the range on Friday. High there. Low there. So your risk would have been about $9.50, and your reward would have been up to the weekly pivot round about $7.50, which isn't that bad. I'd be okay with that. It's less than 1-to-1, but it's okay. And as you can see, that was a clear winner. As was Thursday's, I think, a winner, but we didn't take that trade because we were too close to the pivots. Same was on Wednesday, too close to the pivots. And I can't remember, Tuesday was a winner. And Monday, we didn't take trade because we're too close to the pivots again. So we've got 2 winners out of 2 had you followed those particular parameters. So we'll do, of course, exactly the same thing on Thursday, but you can trial this on any day you want, really, and see how you go. But I would suggest you use those filters in the first instance. In other words, take the range, use the pivots as profit points. And if they're way less than half to 1, certainly, then don't take trade. All right, let's have a look at updating trades that I was in last week. And the first one where I've got egg completely all over my face was this one. We went short pound versus the Canadian dollar using, we trade this on a 4-hour or weekly. Weekly. We traded this bar here 3 weeks ago. And we took our first profit around about here somewhere, as I recall. I'll go back to the daily chart. Around about here somewhere, I think we took our first profit. And I noticed this level here, strong support level, last Thursday. And instead of my usual take another third of the position off and trail my stop, I decided that it was time to close the trade here. Oh dear, look what I left on the table. And it's still going. Still going. As always, exiting trades is the hardest bit. And whilst it was a nice trade, it could have been a whole lot nicer, and still could be a whole lot nicer. And it's not giving us an opportunity to get back in. Of course, there's no retracement. And unfortunately, all of this beautiful profit here has been left on the table. Probably around about double what we did bank, we could have banked. And like I said, still running. Slap, slap, slap. Never mind. It's one of those things. As I said, exiting trades is definitely the hardest part. The other one that I decided not to exit was going the opposite direction, CAD long this time against the Swissy. And that's got no brakes on it at the moment either. It appears to be through the first level of resistance. And despite the gap down this morning, looks like it wants to keep going with the rally. I expect that we're going to get a pullback on this at some stage. Well, we will get a pullback on this at some stage. Where and when, of course, is the answer not known. That level there looks beaten to me. And as I said, that was probably the first resistance area that was of concern. And if we close above that today, or close above the highs today, wow, this really does look to be on its way. I think the next level cuts in around about, there somewhere. Not as strong as this one, but it's there. So another 30 odd pips if we were to get that today, and a pullback tomorrow, that would be handy. I could scale into this, but at the moment I can't scale in because I haven't had a decent pullback. They're the only 2 orders I think that I placed last week. Maybe not. Maybe one didn't trigger. Can't quite remember. But certainly there was no excitement to be had outside of the CAD pairs, 1 pound CAD short, CAD Swiss long. Righto, so to this week, and again, those of you new, welcome once again. But I want to go through what I do on a weekly basis. I'll do it very quickly because there was only one, what I classify as a game changer this week. And it was, in fact, dollar versus the yen. Now, what a game changer bar is really known. Happy Monday to you too, Paul P. Is known more classically as a key reversal bar. Now, what a key reversal bar is, why I'm on Kiwi and I'm supposed to be on dollar yen. There we are. A key reversal bar is something that looks like that. And its attributes are that its high is higher than the previous bar, and it closes on or near its low. It hasn't closed on its low in this case, but it's closed near its low. So that's a key reversal bar. I call them game changer bars for my particular style of trading. And the reason I do that is it reminds me of what they're actually supposed to do. In this case, it did change the game being buying, right? And the game changed to selling. Up here, that's really not one because it didn't close on or near its low. I can't see another one going down here, but on the upside, this one, it's not really, here's one here. This one here closed below the previous bar's low, and it closed bang on its high. Did it change the game? No, it didn't change the game because we're already rallying. So that wouldn't be one that I'd trade. But it played out perfectly well. And this is exactly what the situation that I'm faced with today. Well, not exactly, because we did have a retracement prior to that bar, 2 bars prior anyway. But today I've got same scenario where are we changing the game here? Answer no. Yes, the low is lower than the previous bar and it's closed on its high, but it's really not changing anything. That's why I call them game changers. I don't trade them yet unless they're actually changing the game or changing the trend or the momentum, not the trend, the retracement could be anything as long as the previous move. And that is not changing the previous move. So I won't be taking that. And it's the only one that bobbed up on the radar today. The watch list that I have concocted is also very brief because we've got a massive week of news this week. I think we've got 4 central banks with interest rate announcements and, more importantly, their statements that go with them. And for that reason, it's probably going to be a little bit on the quiet side, in my humble opinion, before we get into those announcements, which I think the Fed starts on Wednesday or overnight Wednesday for most of us. The 2 that I did come up with, however, were these. First one was Euro Kiwi. Not necessarily on the weekly chart, but you can see where I'm coming from here. I've got a descending channel off which we are coming, the bottom of which we are coming from, and have already done that. And we get a nice little retracement on that move today. If this doesn't eat into this candle by much more, I suppose you don't want to probably go more than 50% here. But if it didn't, that would be an opportunity to trade it long tomorrow. There is a problem with that, however. In that, you can see the monthly pivot here, which was broken on Thursday with a massive selling bar, but held up as support for the longest time prior to that, certainly in the daily realm of things. I like the fact that we've bounced to the daily pivot and the weekly pivot already. And I want to investigate this on the 4-hour chart. You can see the false break area here, where we've come back inside, got above Friday's daily pivot, and now are testing today's daily pivot. This may well be on the shorter term, something to pick up in the not too distant future to trade it up to these 2 pivots here. Maybe even on something like an hourly or 30-minute chart. I don't see it there yet, and I'm really not that keen to trade until I've got, well, I'm not keen to trade at all until I've got a setup. It may look like this. If that becomes a low and we were to break that area, don't come down and take out this low, of course. So if we were to break here, maybe find this area and then come back above the line, retest it in confluence with the daily pivot, then I think we've got a trade on our hands. There'll be a nice little gap in here, providing that price does exactly what I'm asking it to do, and oftentimes that's not the case. So what I'd like to see is price break through here, a little bit of consolidation, maybe find that level there, back above the trade line and retest it. If that's the case and we can get an entry there, maybe a stop loss there, we've got a reasonable chance of getting up to the weekly pivot for around about a 1-to-1 scenario. And if it managed to get through there, onward and upward to our target area up here. So getting safe in the market at that area would make sense. If it's strong enough to get through, it's got a bit of a problem. It's got a weekly pivot untested, monthly pivot, which has been tested, but it is a resistance area. So strong resistance here. So don't, in my opinion, I wouldn't take this trade if I'm too close to that area. I want to be down here somewhere to take the entry there or even there if you've got big enough kahunas to do that. So that's Euro Kiwi. It's definitely on my watch list. There's only one other. As I said, I'm anticipating a quiet week until we get these central bankers doing their thing. Kiwi also features in the second one, and it is Kiwi versus the yen. Now, I'm looking for a short position here, but like I've just described on Euro versus the Kiwi, I'd like to see this get underneath the support level. So in this case, you've got a triple header here. You've got the monthly pivot, you've got the weekly pivot, daily pivots up here somewhere. So it's in the mix as well. So if we've got underneath all of that support and the trade line support, I'm talking probably Wednesday or something on the daily chart before that were to happen. But on the 4-hour chart, if we can find something that makes sense, happy days. Nothing there even remotely like a trade at the moment, but if we were to break through here, come back and retest the confluence of two pivots and trade line, then we've got a potential trade on our hands. Smaller time frame, I like this scenario. So as always, if I'm at resistance, I'm looking to trade short. If I'm at support, I'm looking to trade long. I would like to see price get above this level, maybe hit that high, then come back underneath it. And the daily pivot's nice confluence here once again, retest it. Then we've got to trade down to the trade line and the two pivots and onward from there, which would get us below this level and tracking towards the bottom of this channel. This looks pretty decent to me as a setup for a reasonable reward if you can get into the market and safe before that support line there, which is around about the 86.3 mark. So they're the two that are really on my watch list this week. And to be honest, not a lot else. If I went through all the currencies pretty much this morning in my preview, and I couldn't find anything that made sense in terms of bias other than those two, which is pretty weird because it's the beginning of the week. You'd think there'd be something there. I'm a big fan this week of trading ranges, and if you can find ranges that are just begging you to trade them, then that's exactly what I'll be looking to do. Aussie pairs are a little bit weird, but there's a nice little range there, for instance, on the Aussie versus the dollar. And if you can isolate the bottom and the top of that range, then I'd be looking to trade it off the top down to the bottom, off the bottom up to the top, whichever way you can find into those types of scenarios. So that would be my theme for the week until these announcements are made. Hit the tops of ranges, look to trade them towards the bottom, hit the bottom of ranges, look to trade them towards the top. Other than that, you got two there, Euro Kiwi and Kiwi Yen. What do you got, Ash? How you doing, mate?
Oh, no, yeah, very well, mate. I completely agree with your analysis, actually. I think it's going to be a tricky week. I think it's looking to me like some of these risk assets start to come down a bit. But it's going to be, as you say, to do with the central bank and timing it. I've been looking right across the board. This is the DAX, the German stocks. And I see when I look at this, you can definitely see that there's this high test bar up here, but finding the level is a little bit tricky. Now, I wouldn't mind sort of like if it comes back and tests that trend line along there, and if it did, then I'd be quite happy to take on the short. Maybe it comes down a bit and then pumps up a little bit, and I think it might be one of those types of weeks, because I wonder whether there's just a little bit of indecision about what goes on with the Fed. And really, I totally agree with you. If you look at this top end of the range, this may well be the bottom end of the range. It might even be a little bit lower. This isn't the line for the DAX, I don't think. This has come from another asset. Looks like actually the bottom end of the range might be more like this. So yeah, it's probably in there actually. And we're at the top end, so I think you know, maybe staying in inside this, that would be a 1 and a bit % drop of the actual value of the DAX. The ECB raised interest rates again last week, and the DAX is under pressure. Germany's under pressure. GDP in Germany and actually some of the fundamental data coming out of this particular country has been really negative. We saw a decent try to get above this breakout zone on Friday. I think this bar is quite significant. I think it's actually telling us quite a lot about the state of play here. So the DAX would be a short for me. I have to say it's got to be the same with the CAC as well. Right under this level now, closing the gap. Maybe we get a little bit of a bounce at some point, and that might well trigger me in. You know, if I can get into a trade at these particular points here. But I am looking for a decent retracement. Had a little sneak really on you know, as the market opened up. Little sneak to try and get in, and you can see the significance of that line. You know, this is the first 15 minutes of the day, and it attempted to get back above there. But that tail is telling us quite a lot in many respects. It's basically telling me that this is the level. This is the level that is going to be protected. So I like the CAC as well for some downside. FTSE, a little bit tricky actually, because with the FTSE, if you look at where it's at, this has actually taken this level out. And the retracement looks like it's going to come and maybe sort of like try and hit a bounce point. Yes, I think there's probably some downside, but I'm not. But this isn't really an out-and-out short. I think with the DAX and the CAC you could go with a short and potentially stay with it. With the FTSE, this would need more information. This would have to get under this level, where the CAC and the DAX are already under their levels. This one really is probably going to use this area as a bounce point rather than a bounce point to the downside, probably a bounce point to the upside. This is the other area there, you know, so there's a getting towards confluence depending on when in the week that happens. So FTSE a little bit difficult because I'm not really too bullish about the stock market, generally speaking. The NASDAQ is the one I'd love to get. I'd really like to get.
It got hammered on Friday, didn't it? Oof.
It got hammered on Friday, yeah, and an interesting one really, because it was towards the end of the day, and it is suggesting, you know, what I've been looking with the NASDAQ to see whether this was a genuine reversal pattern up here with this head and shoulders kind of that seemed to have formed. But I don't like head and shoulders patterns when they stop becoming equal from one side to the other. And if we were to measure it, then that's probably the left shoulder. That's as much as we can probably say, you know, adjust the left shoulder. We can't really sort of take it much more than that. And then if we're going for the right shoulder, well, it's difficult actually. There might be a little bit more in there. Might not be too bad still. The NASDAQ. So
it's a Quasimodo one.
Yeah, it's a bit of a strange one, isn't it? This kind of double hump over here. It's making it a bit more complicated and complex. But it you know, when you look on the weekly seems to be a little bit clearer. Oh, come on, don't turn me off. Oh no, I haven't. Sorry, I thought I'd frozen, but I wasn't playing with Zoom properly. Yeah, you look on the weekly. That's the horizontal level. This is a really interesting looking bar, and that's also suggesting the same thing. Actually, that the NASDAQ is probably going to collapse here. Seasonally, a terrible week for the NASDAQ. You know, this week is not a good week seasonally, and but I don't know whether that gets pushed out. Actually, interesting, mate. You're talking about the the CAD earlier on. This not so much against the Swissy, but the CAD tends to have a pretty poor time of it now for the next month to 3 months. So CAD trades
Wow.
are sort of like, for me, getting a little bit more cautious. You know, it's a bit more tricky now. And I think sort of, you know, taking profit on particular positions or closing positions, even though it looks like it's got some juice to go, and whether you balance the seasonal aspect to what's going on with OPEC, which is really seems to be more than anything else what's boosted that that Canadian dollar. What's going on with OPEC is incredibly bullish for the CAD. It's a difficult balance but becomes a bit harder. But I think the retracement is probably likely, as you kind of pointed out. So
Did
yes.
you like my exit on pound CAD?
Do you know, mate? It's one of those,
It's a
isn't it?
that's a gold medal one.
Yeah, it's a gold medal one, but you've stayed in the CAD Swiss, and actually, like, you know, having it too much exposure to one currency is, you know, can be difficult. And actually, we both made a mistake on Friday, on Thursday, because somebody was looking for the Euro Aussie short, and
Yep.
and I think we both liked it, but we didn't like the price. Well, actually, it
Well,
didn't.
just said we couldn't trade it at that level. That's right. It was at
Yeah,
massive support. It was
yeah,
news that drove it down. You can't do anything about that.
no, no,
And I would do
no.
the same thing 100 times over.
Yeah, I would as well. I would as well. I suppose that it's a difficult thing when somebody's asking you about, because yeah, it was here, wasn't it? It was very, very close to these lows here. But and it's a difficult thing when somebody's asking you about a trade, because they've obviously got a specific setup that they're trading. And
Was that you, Paul
like
P? From memory, I think it might have been.
Paul B, yeah. Well, I was I didn't like the setup, and I would I'm with you, mate. I wouldn't trade it, you know, 100 times out of 100. Actually, I don't like it down here, but it went down. You know, it was
It
a
sure
fair
did.
setup on whatever kind of position it was, and this is a difficult thing. And I suppose really the question is, you know, would you trade it, is one question. No, neither of us would. Is there a relevant setup? Well, I suppose it depends what your indicators tell you, and that's very difficult for us to answer. I think both of our opinions was that this was just in the wrong place, and it was
Yeah.
just too low, but it did come down. So now the euro is kind of floating around. They raised interest rates and it still came down, you know, which was interesting. But I like the euro still short, and I quite like it against this yen. Now, the yen's are quite an interesting currency in many respects, because I like the euro short against the yen, and I like the pound short against the yen. I did trade the euro short on Friday, but only to this point down here. Actually, I think I took profit before it even hit that level. But as soon as I saw that they didn't raise, they didn't keep interest rates on hold, it spooked me out a little bit. But I like the setup there for a quick short, but as we know, difficult ones to hold on to, anything against the yen. Pound yen I also like for a short. Now, this drives me towards the Nikkei, because if the yen is to strengthen, and we're looking at potentially, and this is what my broad sort of thesis really is for stocks to come down. I think that stocks are going to hit a bit of a breaks when it comes down to the seasonal bias as well. But I think that with these currencies where they're going, these look like they could be coming down as well. And you look at that on the Nikkei, you know, it's not quite there yet. But if the yen is to strengthen, this should weaken this Nikkei. And I probably will take this on, actually, if this does come back. I haven't picked my level just yet. And this is the challenge I've got, because I think these are coming down, but I don't particularly like the price. The Nasdaq is my favored one, but again, I don't like all this. You know, this to me is like a lot of people left behind, and they will not be happy about the fact that they're still long here, and they're probably still long here. So I would really like this one to come back. Now, I don't know where to, but if you look at it really across some trend lines, then it's kind of suggesting that that it's probably in there somewhere. It looks like it's in there to me, which is even sort of, I mean, that's still a relatively shallow retracement. A lot of people will be quite happy here, but that's still a little bit shallow for me. I've got to be honest, mate. It's a, you know, as I say, it's going to be a tricky one, but I like it. I like it for sure. That looks like a cleaner line when we look at the 4 hour, and this is sometimes what you have to do, isn't it? Mess around with the time frame. Where's the clearest time frame for what you're trying to do and what you're trying to achieve? And oof, that's still quite high, but that's the clearest time frame for me. So I'm looking at the Nasdaq with around about a 1% boost. You know, I want a 1% sort of like rally, and then I'll look to take it short for the Nasdaq. So I'm looking out for this stuff and seeing if there's anything going on. I did take gold on Friday as well, and I took it down at these lows here because the trend line was in place here. So I thought, you know what, that's probably worth a punt down there. Looks to me like it's worth buying it and then seeing what happens at the central bank. If the central bank does leave interest rates on hold, then gold may well rally from here. It may not, but it may well rally from here. But if the central bank obviously raises interest rates again, then it might be curtains for quite a few of these cross products against the dollar. But you know, in a day or so, maybe I can get these stops to break even. Might not be. I might not get the opportunity actually, but I can get a bit tighter. You know, there's a few things holding it in place. I may get it to break even before the Fed news if it's high enough. But this has also got a level of resistance up here. So there are a few things not yet in that sell zone, but when it gets up to that point, then maybe some decisions need to be made. But you know, I'm the same as you in as much that I don't really like the way anything's looking today. I've got an opinion about direction, but I don't like the prices. Nasdaq, just don't like it here. You know, I think that needs to come up at least to that level there probably before I'll be interested in the short. And the problem with this, if you take things too early, they just become too expensive to hold on to. And I don't really want to do that. You know, stops at this stage. You look at this daily, it's probably at the high. You look at the 4 hourly, still at this high. You know, there's not really a kind of lower high that's being created here. So really unfolding needs to happen. You know, that's what I'm really after, is a bit of unfolding. But I'm interested.
I think that's true of quite a lot of these. The ones that have made moves have not given us a chance to build a position. You know, you're in.
I was close to this.
You can't get back in.
I was close to this on Friday. I was close to the Nasdaq. I was close to going short on the Nasdaq. But my biggest problem with it was that when I looked across the board, everything else, when it came down to a lot of these indexes, we're actually doing pretty well. So I was a little bit skeptical about which way it's going to go. But things have changed. You know, all of a sudden, you look right across the board. This is the ASX 200. That's the Australian situation. Look at that bar there on Friday, the end on Friday. Very, very negative. China, really negative bearish bar, and we're getting a bit of a rally right now, but a negative bearish bar on the Chinese stock exchange. Same with the Nikkei. Not so much with the FTSE. I mean, it is a bit of a bar up there, but because it's through the level, that's where it becomes a bit of a problem. Definitely with the Kakaron and definitely with the DAX as well. So this is basically saying to us, global equities, watch out, look out below. And just as we said with the CAD Swiss, you know, we've got no right to be traders unless we take these types of messages.
Yeah.
I feel the same about global equities. You know, I don't feel like I've got any right to stay in front of the charts and trade unless I'm willing to take one of these on the short side. So I need price. I need the right type of area to negate the risk a bit. But you know, I think that if you look at that, that's a 1 and a bit % move to the upside for only nearly the same thing to the downside. If it comes into this sort of, you know, if we are going to sort of like stick in this range, which we might do, it might just be that we're looking for a retracement. That right now is not worth it. So it's got to go up a bit. You know, I want at least a 2 to 1 out of this, or between 1.5 and 2 to 1 and above. If I'm going to take this on, global equities are inherently more difficult to short than go long, just because of the state of psychology towards stocks. So I need to get it right, but I as I say, I don't think I've got any right to sit and be a trader unless I look for some shorts in these global equities, because they're sending a strong message right across the board. And as I say, seasonally, they all say the same thing. So it looks to me like the seasonal bias is going to play out this year. The messaging is there. And I just need to get something. I just need to get on board. The FTSE I'll probably avoid. And the FTSE I'll probably avoid because as OPEC potentially continue to squeeze supply, the FTSE 100 companies, BP and Shell, a couple of the biggest, are likely to still be okay and do all right out of it. So I don't want to take on a short with the FTSE, but the DAX, happy to. Nikkei, happy to. The Nikkei's been pretty solid recently, so but I'll be happy to. And actually, you know what? This is better. You compare the two of them, the Nasdaq, that's about as good as you've got for a stop right now. That's not great. You look at this whole bit here, not great. You look at the DAX, bit of a different picture. You know, if we can get in short here, that's the stop there. And that's not so bad because it looks like that might have just been nibbled at. In actual fact, I wonder whether I might even take a little nibble at this now, mate, actually.
I've got a nice setup on the euro too, but I don't like the size of the candle.
I'm just going to take that there and just fix up some of my other accounts. So if you give me a moment, I'll be back with you.
Okay, well, I'll take the screen. I'll put a trade on the euro.
Cool. Sounds good. You going long or short?
Short.
Okay.
Okay, the setup is this. I'll just have a look at the ATR because it dictates how much I'm willing to squeeze my candle. And the ATR is around about 70, which is not ideal for a 6-pip candle, which is exactly what I've got here. However, it fulfills most criteria, so we'll just have a small investment on euro versus and the reason is it's a strong resistance level that we are at because it's got a crisscross of support and resistance, and it's a double cross on the daily pivot. So I'm happy to take it. We'll just go very light in 0.25% max here, and I'll put it on the trade manager so I don't have to watch it. Spreads are less than 1, so that's okay. As I say, 0.25% max entry will be at the bottom of the bar, rounded down to the nearest pip, 1.0657 is the entry. Stop loss, we'll just sneak it above the resistance here. So we'll use that line 1.0667 1.0667 actually. We'll go up 1. Take profit pips. We'll use that level there, 1.0647, which will be 10 pips. And that will be the trade. What have I done there? It's just a one-to-one trade. Okay. Got it. TP1 we will disable, and TP2 we will disable, and we'll sell this. Okay, there you go. 0.25% at risk, 0.25% to be gained. It's a pretty simple trade. What do you got?
Good stuff. Right, I'm all in now, so I'm okay.
All in. Whoa, that sounds good.
all trades are initiated, I should say. So we'll see what we get from this. Really, targets are at the bottom of the range, but you know when it comes to it, I think we're about there. It's difficult. Do you know what? I'm going to just flip to my futures chart because I don't like looking at these. I much prefer to look at the futures because it's genuine contracts. I don't know what this is really. So I know it's a CFD or something, but it's a strange one because really, you know, what I wish brokers would do is give you the actual cash trade, but this isn't cash because it's open way after the markets are open. So you know, these weird sort of CFD ones I just don't like. So I'm just going to have a look at the futures for analysis because as I say, I prefer to look at it. But you can see trend line along there. The trade was taken on the retest of that area there, and then we're looking really for coming down here. You know, there's two ways you can do it now because of that. And that's now a 2-to-1. You know, with the stops of the highs, that's a 2-to-1. That makes it a bit safer. Now, the way I like to do it is I like to look at this area here. You know, because if that area gets broken and retested, it might be that I make a judgment that this is going all the way back up here and through. So it might be that this becomes like my soft stop loss. In fact, it is my soft stop loss, but I need to have a look here. Now, what that does, it enables me to effectively not over assume that I've got the correct level, the absolutely correct level. You know, what I will always assume is that I've got the correct direction. You know, because otherwise, there's no way of kind of continuing to stay in the market. So I'll assume on the correct direction, but I won't necessarily say this is absolutely where this is going to turn. I think it's going to turn here, and the way that I'm going to make myself safer is by giving my stop loss, my emergency stop loss up at this point here, just in case, you know, there's a huge spike for whatever reason, and if you think that won't happen, then you know, but I would spend a few more years in trading because it can. It's interesting actually. My daughter was on her bike the other day, and she said to me, we were only going down the road, and I said, right, put your helmet on. And she said, do I have to wear my helmet? And I said, yes, you do have to wear your helmet, because, and it's not for the you know, hundreds of times or maybe 1,000 times that you don't fall off your bike. It's for the one time that you may. And that's what you're always protecting against. You're not protecting it for everyday use. You're protecting it for the unforeseen kind of incident. And it's the same with trading. You know, it's exactly the same with trading. You know, the stops are in place for those unforeseen incidences. In my, you know, that's the way I use them anyway. But I will look at this and I'll have a look to see whether it looks very strong here. You know, if all of a sudden I get something that looks like this, where it looks like it's taken that area out with a really strong bar, as an example, is, you know, not hard and fast, but as an example, if I get something which all of a sudden sort of like looks like it's taking that area out, and it looks like we're going to go back to the highs and maybe beyond, then I'll close the position just off the back of that, and I've saved myself a whole lot of pain, half the trade actually. So yeah, so I'm going to put the emergency stop loss up there. There's still plenty of room for a 2-to-1. Which is the important aspect of that. You know, I wouldn't do it at less than a 2-to-1. So so that's what I'm going to do, mate. That's what I'm going to aim for. And if this is still alive by the time the Fed meeting is happening, then I can start to maybe put my stop losses closer and forget about, you know, the way that looks from that point. So so yeah, we're in and flowing, mate. That's the current position right now, that we're possibly on our way. We'll see.
Happy days. Speaking of on the way, I expect George will be in very, very shortly as well. He'll be talking indices. Yeah. Maybe I should explain. There's a few people in the room who haven't been in here before. I better explain what I'm actually attempting to do here on this trade. It's very much a classic my type of trade. What has actually happened here? And I was talking about ranges before, and whilst this is imperfect as a range, what I'm looking for in a range is 2 equal highs and 2 equal lows. I can easily find that on this chart because we are in a range. So if I went, I could use those 2 highs, I could use these 2 highs here, which I will do because we've rejected that level again. Then I could come down to 2 equal lows, which is probably in this vicinity where we are. Let me get rid of that for now. So 2 equal lows, 2 equal highs, and that begins the range. Now, what I look for when I've noticed a range, just like in here, there's a range, right? What I'm looking for is price to come off the top of that range. Now, the range isn't formed to here, right? So I'm not looking for anything until we've got the range formed. Range is formed at that point because we've got 2 equal highs and 2 equal lows. Then I'm looking for anything like a lower high and a setup to trade me down to the bottom of the range. Now, I haven't had that at all until here. There's the lower, or maybe that was a lower high as well. Tough to trade because you're trading straight into the daily pivot. And exactly the same here. This could have been the lower high, but again, trading straight into the daily pivot. Now, we've not only got a rejection of the top of the range, but we've got not a lower high, but a break of former resistance, now support, and a retest of that support, now resistance. Not only that, I've got what's called, or what I call, a double cross of the daily pivot. Double cross means we've had a decisive candle that's closed either below or above the daily pivot, and it's got to be the first time. Had this happened before, I wouldn't be interested in it, but it's the first time. So we've got a decisive bar closing below the daily pivot and a second decisive bar closing above the daily pivot. And that's in sequence, right? So it's 1, 2. There's no candles in between. It's exactly as it is. The second and third and fourth good parts of this setup are that we've also broken that trade line. Trade line being, of course, the 2 tests. Now we've got a third test, which became a break, fourth test, which became a retest, and it also formed a confluence area at this horizontal level. So my anticipation would be that we go to the bottom of the range. And that's pretty much where I've got my take profit level. So tick, tick, tick. There's nothing here that I can say is bad. So that's why we took the trade. You could consider trading it down to the lows here, but that's not the setup. The setup is the range trade. It's really nothing more than that. It's trading from the top of the range to the bottom. And we've got all of those circumstances that agree with that. So if that's not understood and you would like that to be further explained, then that's what the chat box is for. And those of you here for the first time, as I said, welcome to you. Don't be afraid to ask questions, share your thoughts, maybe even share a potential trade, ask questions. That's what we're here for. We're here to share. And that's what Trading Buddies is all about.
Yeah,
Nothing
really,
like having a mate to lean on.
No, absolutely right, mate. Do you know, I was going to say, if anybody's got anything they're looking at, then it'd be great to look at it. I mean, it's, you know, we're only going to look at it from a charts perspective and a you know, our own particular perspective. But even if it's anybody's got any ideas, anybody else got any ideas of maybe something they're looking at to trade, to see if we can spread the wealth a little bit, because we need ideas too, don't we, mate?
Hell yeah, certainly this week I do. At this point in the week, I've got very little on offer, and like I said, maybe the smaller time frames and trading ranges is where I'd like to be. Unfortunately, I won't be in front of the charts at the time where I need to be able to do that. But this is such a time, so happy to jump in and see if we can get this home.
Yeah. No George today, no?
No, and I haven't heard from him, so I anticipate that he will be here. Dollar index. I want to talk about
dollar
that
index.
again.
Yeah. Do you know, it's well worth talking about the dollar, because actually so much is hinging around that at this stage. And obviously with the Fed this week, it's really all hinging around the dollar index. And this is why when I kind of looked at the charts this week, and I looked at the economic data and everything else, I just thought, this could be a tricky week to navigate. This could be harder than most, and the charts kind of express that. And one of the reasons that I think it's trickier than most is not because fundamentally because of the central bank news, but because so much moved last week. There was so much kind of grappling last week, and then you go into a rate decision week. Does that mean that things like things that have rallied, things that have rallied against the dollar, all of a sudden start to calm down, maybe give some retracement? Probably, but it doesn't necessarily mean that they're going to reverse their course. It's after an explosive week and after almost like a trend maker that we saw in many things last week, it's very common for them to sort of like go into a bit of a range bound situation. And as I say, mate, I looked at that and I thought we might need to see a bit of unfolding before we kind of get a really confident position on this week.
Yeah, exactly my thoughts. And Catherine's just agreeing with me, saying exactly the same thing. She's quiet, not because she doesn't want to chat, but because she can't see anything that we're not seeing as well.
Yeah, it is. And I suppose it's one of those. Oh, there's George there. I suppose it's one of those weeks that you just kind of maybe do something else. I know I've got into that DAX trade, and it's because of price. I like the price, really. I like the direction of travel, because of what these indexes are telling me. But ultimately, I like the price of the DAX. Actually, interesting to hear what George thinks, because George, I think, has started to move into the DAX recently, and to get his opinion on that would be great. He's only just popped in the room, so he's probably getting himself together. But when he comes in, let's see what he thinks, mate. Unless you want to sort of like cover this dollar index for a bit.
Yeah, look, it's exactly the same as my analysis last week, which was I want to wait until. Well, I thought the dollar was in a very precarious position last week because we were so close to the top of this range. I anticipated that we would hit the top of that range and then pull back off it, giving us a high test bar, which would make perfect sense given that we'd had 1, 2, 3, 4, 5, 6, 7, 8 weeks of buying, and solid buying. It's not just little bits and pieces. Solid buying, all those bars are very, very strong. So that didn't happen, of course. We didn't hit the top, but gee whiz, I'd be very surprised now if we don't do that prior to the Fed, because it looks like they're buying into that. But what is a little bit interesting is the Fed's supposed to pause. So why would they be buying into that? Do they know something we don't? I don't know.
Yeah, the data's mixed. I think that's the thing. When you sort of like look at what the messaging has been, the Fed have still got every reason to raise. At least another kind of quarter percent, and at least another 25 basis points. They've got every reason. Inflation isn't where they said that they want to get it. So while inflation isn't where they said they were going to get it, then that kind of interest rate rise scenario, really, if things were kind of black and white and straightforward, that's really what should happen. That's what they kind of have explicitly suggested is their remit, to have price stability and to and have maximum to near full employment. Well, the labour market's still relatively robust. It's still doing okay. There's mixed numbers, from the labour market, but generally speaking, it's in that tight range. So if the labour market is tight and numbers, when it comes down to prices, are high, then interest rates should be raised. If it was binary, that's what should happen. So I guess that's what's going on really with the dollar. But it might well be just a complete flush out. I don't know whether you kind of subscribe to bull traps and bear traps, but if it's one of those scenarios, maybe that's what we're looking at, a bit of a bull trap here, where some people buy into the dollar and everybody else kind of gets out for a while.
Yeah, look, I'll just have to stick to my thesis, which is it hits the top of that range and pulls back,
Yeah,
potentially, back to the 103s, 103.50 area in the first instance, and then perhaps just goes off the rails and comes back right down into this range.
yeah,
So, that's kind of where I'm at with this. Long to get short, I think it's too tough given you've got to wait for that Fed announcement.
yeah,
I'm tempted, to be honest. I'd really like to have the kahunas to go, okay, I'm going short at this level. And where do I put my stops? That's the biggest problem.
yeah,
Where the hell is the risk here? I don't see where the risk is. Maybe
yeah,
it's here.
yeah.
And that's a heck of a
I think, yeah.
heck of a
You know
stop
what, mate?
loss.
I think you make a really good point, and I think that's some of the problem that we've got today. It's not so much that there aren't things that are possibly even at attractive price levels, but where do you put your stops? Where's the risk?
Mm.
And it is the challenge of the day, and this is why I suppose some unfolding of some information, maybe sort of like carve out something which suggests a lower high. Then you can put your stop in and around where we are now, which is really what we want. But yeah, that's the challenge. That's the big challenge. Is direction is only one part of it. Where you put your stops so you make enough money on the risk is the quandary.
Yeah, you can be 100% right with the direction,
Yeah,
100%. But there'll be somebody there that says, "Yeah, just not yet. Just hang around until I get your stops. Then you can go." And
yeah,
that's the problem. Yeah.
yeah,
So yeah, and you've really got to have a handle on where that is. And right now, I don't. Yes, you
yeah,
could put your stops above here, but that's where I'd want to be entering the market, right, at that level to go short.
yeah.
So after that, where do I put the stop? And that's the big question. I can put it up there, but gee whiz, what a terrible reward to risk that I've got.
Yeah, yeah.
So that's
George
not
is
going to
there.
happen. Here's George.
George,
Bye, George.
By George, we are interested, George, in your opinion. Well, I certainly am. In your opinion of the DAX.
Yeah, how you guys doing?
Yeah, we're
Yeah,
doing
well,
well,
mate.
mate. We're doing well. We're both scratching our heads, to be honest. We've been scratching our heads for the last 40 minutes about how we're going to navigate this market this week, because so much has moved and there's so much kind of coming out this week that it kind of it becomes more of a challenge.
Yeah. Well, I mean, what's happening? I'll tell you what. Let me share. On Saturday, I just looked at my charts, and I need some powers.
Oh, mate, sorry, I'm otherwise distracted.
No.
That's unusual, isn't it?
Oh, it's very
Normally I'm right on top of that.
yeah.
That's very unusual. All right. And I had a look at where's my PowerPoint there, and I just put all of them on kind of one screen. Can I do that? Yep. So I found that quite fast. I mean, this was Friday's candle on all of these. So this is the DAX, and that was Friday's candle. Now, after Thursday, I mean, Thursday was pretty huge in terms of bullish price action, as we all say, and kind of reversing, a lot of price, the bears selling here. But what we ended up creating was this lower high double top. Now, you'd have thought if the bulls are strong, at the very least, that candle should have a small body on it instead of that tail. So that doji for me was problematic for the bull case. But then if you look to the left, you have huge selling off here, and all you have is a lower high double top. So in that larger context, it's probably not unusual that the bears came in and forced that to happen. Pretty small range compared to what we have. So when I've looked at that, okay, the bull body bit problematic, but the structure is a bearish price action. So, I mean, if you're trading this on the daily, and if you wanted to take a position, that's probably where you'd want to put your stop, right? Above here, above that lower high. So as far as DAX is concerned, I'm pretty bearish with it.
Yeah,
Now,
when you look across the board, George, I see you got the FTSE up there and the Hang Seng 50 as well. When you look across the board and you see really that and the S&P, is that the S&P at the bottom right? And you see those the daily bars on Friday were across the board. They were all showing some selling. Does that compound your case for selling for the DAX when you look at that?
Yes, definitely. So for the DAX, I'm looking to go short. I'm definitely looking to go short, and I'm looking to go short off this larger structure. This one candle here, had we had follow through, even if it a bigger body, then you could have had some doubts in terms of sellings. But I'm definitely looking to see if we get selling. And I think we kind of dipped below the low of Friday. So I'm expecting a lot more selling. What was interesting about the structure of this market was, I mean, if you look at the S&P 500, everything else was almost like a failed breakout. I mean, that just sold off dramatically. Now, the bears have the chance to keep selling, bottom of trend range. They're strong, they'll continue to sell off. So overall, like I said last week, I'm pretty bearish on all the markets. So I am looking to go short. Interesting enough, I've got a couple of shorts in on DAX with a wide stop, very wide stop about there, which again raises a question, like you were saying, where is the risk? Because for that to make money, it's going to come down all the way down here, just below. But then the issue is not that trade. If we start selling off these other trades, you can take it during the day.
Yes. So
that's kind of my thinking at the moment.
Yes. Yeah, that makes sense actually, is that you could almost have like a little marker. Your first trade is more of a marker where you do have that wide stop, but you can, as you say, if this starts to pick up a little bit of pace and a bit of momentum, then we can start to add to those positions. So I was saying to Jeff, the seasonal bias for these indexes is really bearish going into October. So we got 2 weeks really of year-on-year historical selling on the whole. It tends to be sort of an area of weakness. Then you kind of add to that the situation that we're in with central banks kind of raising interest rates, and the reason, that's always the thing. What's the reason that people would buy stocks? Well, we were always kind of I suppose schooled. We've been schooled for the last 2 years that there's nowhere else to put your money. So put it in the stock market. Well, now there is somewhere else to put your money, and the stock market is held on, I think, quite spectacularly, really, over the course of the last few months, and it seems to be off the back of the hope that the Fed are going to start kind of reducing interest rates. Well, I don't know why they would do it that aggressively. Even if they do, even if central banks across the board do reduce interest rates, they're still going to keep them relatively high. You'd still see them at around 4%. 4% as a risk-free rate is pretty good. So I don't know. I don't really know. I can't see the case for stocks. When it comes down to it, the fundamental idea to hold stocks seems to be a bit strange to me, and I wonder whether some of the buying that we've seen is just some of the bigger institutes just clearing out, rally it up, sell it off, rally it up, sell it off. But a nice gentle kind of move before potentially something which could be quite serious.
Yeah, I mean, I think that's probably it. And the problem is, if you have a tight stop, I mean, anyway, in here, you get stopped out and the market might still go down. So,
yeah,
I mean, a wide stop up there is probably what you need.
I agree.
So on the DAX, you need a wide stop. Here, I don't know, you might have had to look somewhere to your left and decide to put a stop somewhere there.
Yeah.
Have you got a limit on that, George, as to what you're prepared to accept as a risk to chase a potential reward?
Again.
Have you got a limit on where you're prepared to put your stop in in terms of risk to reward ratio, I suppose.
Not really. I don't work in reverse, if I can put it that way. I don't say, okay, where is my 1-to-1? So, or whatever, 0.5 to 1. So therefore, let me put my stop at a certain level. What I do is try and find a technical level that, I think if the market gets over. So let's just open this up. So on DAX, I'll probably say, if the market breaks out above, so that's the high of the day, and go a little bit higher. I mean, at the very least, I'm looking at if the market breaks out above there, then the case for the bears is no longer strong. So that's where I'll put my stop. Now, if I'm taking a trade anywhere in here, I'm not saying, hang on a second, where is my 1-to-1? So let's say I sold here right in the morning. I'm not trying to figure out if I'll get to 1-to-1. I'm trying to figure out where I would be wrong in my thesis, if you like, because the whole rationale is, it's early in the morning, it's first trade of the day or second trade, depending what time you've been trading. So if I am right and the market does move in my direction, that trade at some point to get to 1-to-1. But as we start to break out beneath these lows, there will be other cleaner opportunities or tighter opportunities, where you can put a stop here or there, and you get to your rewards much faster. So by the time you get to this one, if you've taken up there and you're already fine, by the time you get to there, you might have got another 0.5 or so on another trade, if that makes sense.
Yes, it does. I suppose that what I'm digging for is, if you had your measured move that was, let's say it's 100 pips, and your risk, your calculated risk, is outside of that by a factor of, 3-to-1. So your measured move gives you a third of your risk. Would you not take that position? Yes, I understand you can still build that position, but is there at any point where you would say, okay, the risk is far too great for the reward?
Okay, so the way I'd look at it, if I'm understanding correctly, so let's have a look at, let's do it this way. I'm just going to scrunch this up a bit. Okay, so this is the whole range of Friday, okay, from this low to that high. So if the bears were strong, as part of the argument, at the very least, they want to get to that measured move, right? To get to a same full range as we had on Friday. Now, if my risk, if I looked and I said, listen, I got to put a stop up here, and let's say the stop is there, and I'm thinking for that particular trade to even get to 1-to-1, the bears have to be so super strong to get below that range of Friday. Then that's problematic. I'd rather not take that.
Okay, perfect.
So if that makes sense, yeah.
That makes perfect sense, mate.
Yeah. And even, if you're in the day and there's some kind of range, again, that same kind of thing where it's like, yikes, then I'm no longer kind of looking at probabilities, right? I'm now starting to bet on George being 100% right all the time,
yes.
Not 80%. That becomes problematic.
Yeah. And it is probabilities.
We all know how that works out, right?
Yeah, exactly.
We always otherwise.
Yeah, it's just not the way to do it. And I think it's one of those things actually this week is that even though there's some pretty strong messaging, I think because of the central banks and so much data, easy week to make a mistake. And I suppose it is one of those that if anybody does make a mistake, it's okay. It's one of those. And the way that you mitigate the effects of that mistake is to not over leverage yourself and not put yourself.
But make it a small mistake.
You make it a small mistake, yeah.
That's the way to look at it, yeah.
Anyway, guys.
Yeah.
Sorry, mate. Go on. You've got more to do.
No, I'm saying that this price action here, who's in control? The only thing I'm looking at is the low of Friday. Seems the probabilities are favoring the bears, but the bulls are still in the market, like you guys are saying, pretty strong in the market. So it's not yet clear who's actually taking control of the market.
Yeah. I'm with you, mate. I mean, I saw Friday's bar, and I saw, the fact that it did rally on Friday, but got a huge push down again. Really got a sort of, and it was in a pretty short period of time as well. A big strong push to the downside, right across the board. That suggests there's some global issues that there's, we got some concern of. And as I said earlier on, and Jeff made the point, if you're at the top end of a trading range, then it makes some sense to look for some selling opportunities, and that's what we feel like we are on these indexes. The DAX is one of them. Feels like it's at the topper end of the trading range. So I think there is a case to be made for some downside in according to lots of metrics, actually.
Yeah, so it's going to be worthwhile watching it and seeing how it unfolds. But thanks.
All right, I think our brains trust has come up with don't do anything right now. It's a matter of wait and see until those positions are clear. As George is saying, it's not yet clear. I'm saying I can only see 2 opportunities thus far this week. Ash, you're saying, and I think, range trading on the smaller time frames is probably the way to go, if anything, until those interest rate announcements are made. Yeah.
As George said, get your stops wide, which is what I've done. I've taken the short on the DAX, but I have got a wide stop. Get the stops wide, and I hadn't considered that the add points could potentially be there, but that is another way to do it as well.
Well, damn sod! I was in for a good argument today and didn't get one.
Always next week, mate.
There's always Thursday as well. We'll try it again then. Have a great week ahead, guys, and thank you all for being our trading buddies. We look forward to your company again on Thursday when we'll go. I think we're going around again, aren't we?
Thursday, yeah. We're going around again, yeah.
Happy days. We'll see you then. Have a great week ahead.
Cheers.
Bye.